Welcome back, you're watching Newsline.
Yes, and time now for our interview section. Today we have Mr. Frederico Gil Sander, Thailand country economist, the World Bank, who will be sharing his views about Thailand's economic outlook. Let's meet Mr. Frederico.
Good morning, Mr. Sander.
Good morning.
Now, let's start with the first question. I believe the World Bank recently revised its GDP forecast for Thailand growth from 6.2% to 6.1%. Can you tell us why?
Yes, thank you very much for having me on the program. The World Bank had expected the Thai economy to grow at 6.2% when we did our forecast back in March, driven primarily by exports. We think that the Thai economy is really driven by one engine, which is its export sector. Now, the export sector has actually done better than what we had expected. We had excellent outcomes in the first quarter, but we also had to take into account the negative impact from the political crisis. And so when we revised our forecast, we came up with a 6.1%, meaning that the better than expected exports and the political crisis basically offset each other.
So it's just a slight revision.
A slight revision.
So if we hadn't had the political crisis, it would have been even more then?
It could have been even more. Of course, these forecasts always have a lot of risk to them, but it could have been even more.
Now, aside from the exports, could you share with us the other sectors? What did you find? Basically, if we look at tourism, manufacturing, consumption, how were those areas looking?
Well, so manufacturing, a lot of it actually goes into exports, is doing quite well and is what is going to be underpinning the Thai recovery. The other sectors that are more closely linked to the domestic demand are not doing as well. For example, retail, and that is one of the sectors that will be more affected by the political crisis, for example.
Now, I also believe that you guys think that we're relying on exports too much at the moment.
I think that it's not about relying on exports too much. I think that the outward-oriented model, the export-oriented model, has served Thailand very well. And I think that the idea of talking about one engine is that if you have one engine that is running well, you certainly don't want to undermine that engine. I think that what we're saying is that Thailand should also look at growing its second engine, not instead of the export model, but in addition to it. And that would be looking at the services sector and increasing growth in those sectors.
And many people are saying our services sector has contracted in relation to the overall economy.
That's right, that's right. Unlike some other countries in the region, including China, which is a manufacturing powerhouse, services as a share of the overall economy has actually contracted over the past 10 years. That in itself is a symptom that that there's something going on with the economy that is a little bit different with what is going on in the region.
Can you explain to us perhaps why this is happening? Is it because our manufacturing sector and our export sector are just growing too fast, or is our services actually deficient?
I think that there's more room for growth in the services sector, either also through trade and services, things like medical tourism, advertising, professional services, bringing in more Thai people into this globalized sector, by having them engage in trade and services, and also increase number of skilled jobs and services that are done in Thailand.
So you see this as another potential source of growth?
That would be that's a huge potential source of growth that Thailand needs to tap on. Okay,
now let's talk about some of the risks that you see, that you forecast, which could actually change the future of Thailand, at least during the 6 months that we have for the year 2010.
Yes, of course, the political outlook will always retain a risk, but that's not really our comparative advantage. So we try to look at an outlook where things remain with some political uncertainty. But in terms of the biggest risk that we see, especially in line with the story of Thailand being so much driven by export growth, is what is happening in Europe right now. We've all been following the crisis in Europe in terms of the Greece and Italy and the fiscal troubles that these countries are facing and the big hurdles that they will have to reduce their budget deficits. So if things in Europe turn out to be more complicated, or if there is a wider crisis, then I think that would affect the outlook for the second half.
So how do you view the situation in Europe at the moment? Do you think that could indeed cause another global recession?
I think that that's not what we expect, but clearly there's a risk. I mean, politically it's very difficult to go through the painful fiscal measures that are needed. Basically cutting budget deficits is never popular, especially when the economies are not doing very well. So there's always a risk that this is not going to be done sufficiently to bring the finances back in order.
Many people are writing that there could be another meltdown. I mean, the first meltdown was with the banks, and the next meltdown may be with national debts. Have you factored in this scenario into your forecasts?
Well, I think that is a risk, is a risk that we have looked at, but it's not currently what we expect. I think that what we are looking at is a slightly more favorable scenario similar to what happened in the UK, where there's a budget announced that is neither too tough on the short term, meaning that it doesn't kill the recovery very quickly and then cause this type of debt crisis, but that on the other hand convinces investors that the government is doing enough to cut the deficit in the long term.
In terms of what the G20 have planned in terms of reducing their budget deficits, do you see Thailand needing to do this at all?
Well, first I think it's important to mention that Thailand came into the crisis with very strong public balance sheets, and the government was able to do a stimulus package and to make up for her revenue shortfalls because it had a lot of space to do it. So eventually Thailand will also have to cut deficits in order to restore that strong fiscal position to face the next crisis. But we don't see any kind of fiscal adjustment in the similar magnitude of what is happening in Europe, and we certainly would not be calling for fiscal adjustment right now.
Okay, so financially, Thailand is still strong.
Correct. I think that Thailand really learned the lesson from the Asian financial crisis. Not only the government, but also the private sector, the banks. I mean, the banks came into the crisis with very strong balance sheets. The corporates were also relatively strong coming into the crisis, and I think that this is likely to continue.
But it is still necessary for Thailand to continue to inject money into the economy, do you think?
I think that there's still a role for the government to play, especially in terms of the provision of infrastructure. I think that in the long term, higher public investments would be helpful for economic growth. In terms of some of the other programs, I mean, I think that one can start looking at some phased withdrawal, some of the other stimulative programs, but certainly we could see more of the public investment plan, the Thai Kim Kang, being implemented going forward.
Because this has been quite slow to be implemented, in most people's view.
The disbursements have been relatively slow. I mean, I think that the government is trying to walk a line between trying to implement things quickly, but at the same time ensuring that the projects are properly implemented. And whenever you have a lot of political uncertainty, that process becomes quite difficult. But we certainly always want to urge the government to implement more of these public investment because the country will need the infrastructure in the long term.
Okay, let me ask you about the currency situation. Since one of our main engine of growth is exports, and we're seeing that the currency is getting stronger in relation to the other currencies. In this respect, how do you think Thailand or the government should handle, and would this indeed affect the competitive edge that Thailand is enjoying?
That's a difficult question. I mean, the Bank of Thailand certainly has been following the developments in the currency markets very closely. I think that to some extent the recent announcement by China to give some flexibility to the yuan may allow not only Thailand, because Thailand is not the only country in the region that relies a lot on exports, but some of the other countries to provide more flexibility for the exchange rate. I mean, it's difficult for us to say exactly how much more flexibility, but I certainly agree with you that the level of the exchange rate is an important element of Thailand's competitiveness, but the Bank of Thailand, of course, is very much attuned to that, and it tries to manage the volatility of the exchange rate to permit the exporters continue to have a competitive exchange rate compared to its competitors.
Mm-hmm.
How would the World Bank compare Thailand to similar economies in the region that rely on exports in terms of our growth?
Well, Thailand's recovery has certainly been as dynamic as in some of the neighboring economies. I think that what concerns us is this lack of dynamism in the sectors linked to the domestic demand. Mm-hmm. If you look at Malaysia, for example, consumption did not really contract in 2009, whereas in Thailand it did. And in the past, the growth of some of these more domestically oriented sector has been faster in some of the neighboring countries compared to Thailand. On the other hand, manufacturing in Thailand has been growing faster than in some of the neighboring countries, and Thailand has been one of the few countries that actually saw its share of exports in the world increase in the past 10 years. Most countries have actually seen their share of exports and worldwide exports decrease. So despite the growth of China, Thailand has actually exported more over the past 10 years.
But of course, consumption in Thailand was affected by the political crisis, which dampened sentiment to consume.
No, that is correct. And I think that over the past few years, not only the more recent events, but over the past few years, consumers have probably been holding back a little bit. So there's also, on a positive case scenario, there's also some upside potential that if people start feeling that there's, that the reconciliation is going forward and that there's some positive momentum on the political side, there may be a lot of pent-up demand that may create some of this better dynamism in the domestic demand.
Did you take a look at business expansion, foreign direct investments here in Thailand as well? How is that area looking?
The foreign direct investments are still doing well. I mean, of course, they have been lower than they have in the past, as it has been the case in many countries. And what we feel is that the political crisis may have detracted some new investors from coming in, although we just saw the announcement that Ford is going to be putting up a new plant for passenger cars in Thailand, which is, of course, a very positive development. But what we feel is that many investors that are already comfortable with Thailand, a lot of the Japanese companies, a lot of American companies, they are probably going to be expanding existing capacity in order to meet increased global demand. But until there is a clear resolution on the political side, I think that it will be difficult to see large new inflows of new investors that are not yet comfortable with Thailand.
It's remarkable that Ford made the decision. What do you think weighed in on their decision-making process?
Well, I think that the car industry in Thailand has been doing quite well, and it's actually very difficult to set up a car industry. It involves a lot of suppliers, it involves a lot of logistical networks, and I think that Thailand has positioned itself fairly well for that. And I think that Ford looked not so much at the near term with all its political issues, but at a longer term view where you had perhaps a lot of political events on the surface, but overall the ability of the Thai economy to permit investors to produce and export have been fairly robust over the past 2 decades. So I think that they focus more on this longer term view.
Mm-hmm.
Any problems concerning Maptaput that are still lingering in terms of investor confidence?
I think that the kind of regulatory uncertainty is something that investors are looking at, and I think that we still need to give it a bit more time to see how that might affect investments in the long run. But I think that it's still a little bit in people's minds, not directly the projects related to Maptaput, but to what extent is there renewed uncertainty about regulations in Thailand. I think that is a question that was put in the air. Most investors probably still feel fairly comfortable with how regulations are enforced in Thailand, but I think that we still need to see how Maptaput comes out.
When's the next report coming out?
Well, so our next report will be coming out November, December with the forecast for 2011 and beyond.
I see.
Great.
Right.
Well, hopefully we can have you back on the program after that.
Thank you very much, Mr. Gil Sander. That was Mr. Frederico Gil Sander, Thailand country economist from the World Bank.
Stay tuned. We've got the sports news coming up after this break. Don't go away.
Stay with us.